going to step down in 2028. That's Sam Shabalala over here. He's going to be stepping down, and Standard Bank will have a new CEO. Then Absa has also revealed their strategy. So that is Kenny Fisher over here. So you've got the two biggest banks in South Africa revealing their strategy. And let me tell you what is the problem with Absa. Absa had a big problem. They had to change the CEO. They fired the CEO last year. And they took a guy from Standard Bank, Kenny Fisher, over here. He was the CEO of Standard Bank South Africa. This is the CEO of Standard Bank Group. So what is happening with Absa is that Absa has got a cost to income ratio of 50%. That is terrible. And then we have Standard Bank with a cost to income ratio of 17%. So Standard Bank under Sam Shabalala has grown to become the biggest bank in Africa in terms of assets. So Standard Bank is the biggest bank in the whole of Africa. It's got so much assets under management, and they've got a big loan book. They are all over Africa. So this guy who we are seeing here, Kenny, was part of setting up the strategy, Standard Bank. And he has now made certain changes. So I'm going to put for you now side by side the Standard Bank and Absa strategies. So what they want to do now, and they've all launched the new strategies, all strategies ending at 2028. And what is going to happen, and that is for Absa, they are going to be driving down costs. So that is the targets. Whereas Standard Bank is going to be trying to maintain their position as Africa's largest financial institution. To cut down costs, Absa is going to be getting rid of consultants. So they're going to be getting rid of consultants, and they're going to try to reduce that cost to income ratio to 50%, while Standard Bank is going to try to increase their cost to income ratio to 20%. They are too efficient. So they now want to increase their cost to income ratio. Standard Bank wants to mobilize 450 billion by 2028 for energy and infrastructure. And Absa wants to mobilize 450 billion by 2028 for sustainable finance. You can see that these guys, almost as if they took the same book, and then they want to move into Africa. So currently, Absa's revenue comes from South Africa. That is 2/3 or 66% of the revenue of Absa is coming from South Africa. So they want to remove concentration risk from South Africa, Ghana, and Kenya. And they want to move into other countries like Tanzania, and probably, I think Tanzania is their biggest focus right now. And then other countries, obviously, which I can't name right now. And then Standard Bank still maintaining, they want to maintain what they currently have. What are the focus areas? As I said, there are 4 focus areas for each of them. Standard Bank, it's transforming the client experience, executing with excellency, driving sustainable growth and value. And then for Absa, so let me show you my face. You're going to laugh because these guys, they've got an interesting way of looking at things. So let's remove that picture. So Absa have so much work to do. Currently, their cost structure is crazy because of the consultants. So if you're a consultant at Absa, be aware of what is happening right now. It means they are going to insource. So they're going to go into insourcing, and they say their 4 pillars are customer-led growth, diversifying the group geographically and by business line, driving efficiency by reducing the cost to capital allocation, and exploring new growth opportunities. So amazing stuff. Look at those strategies. If you are studying MBA, look at this man. He has done so much work at Standard Bank, and then he went to Absa. And then this man has been at the top, first as a core CEO, and then eventually as a CEO. They're doing well, these guys. And banking in South Africa is big business. So it's very big business. You know that Standard Bank has got a big Chinese shareholding, whereas Absa is more of a local bank. So this is why Absa is number 3, Standard Bank is number 1, and then FNB is number 2, and Capitec is number 4. Capitec, a local bank, much bigger, but there are new banks coming up. This year, we're going to see the coming of digital first banking in South Africa, which brings us to AI. AI is developing every single day.